Hello, and welcome to today's video. Today we are dealing with a question that is on many people's minds. How do large corporations manage to pay no taxes despite huge profits? It's a topic that has been the subject of much debate in recent years, and is often perceived as unfair. After all, as a smaller individual, I pay up to 40 or 50% in taxes. So I have to hand over almost half my money to the state, while companies with profits in the billions sometimes pay less than 5%. How can that work? How can it be fair? In this video, we would like to look at why it is possible that these companies pay so little or no taxes, what methods they use to do this, and what impact this has on society. We want to look at what steps have already been taken to counteract this problem, what can be done to achieve a fairer distribution of the tax burden, and especially what can you do to pay less taxes. Reasons and mechanisms for low taxes. The technology giant Amazon, which has been criticized for years for paying only low taxes in Europe and the USA, should serve as an example here. For this, Amazon has a variety of strategies to keep taxes as low as possible. Complicated and opaque tax systems in many countries, use of tax havens like Luxembourg or Ireland, double Irish with a Dutch sandwich model, shifting profits across different countries, clever tax avoidance tricks, such as transfer pricing, where profits are shifted between subsidiaries. Investing profits in research and development leads to high write-offs. Amazon's global focus works to its advantage. By selling goods and services worldwide, they can minimize their tax burden by cleverly offsetting income in different countries. In Germany, for example, Amazon had sales of nearly 14 billion euros in 2018, but paid only 11.8 million euros in taxes. The gap between tax legislation and the reality of the digital age also plays a role. Most tax laws were written long before the emergence of companies like Amazon, which conduct most of their business online and have customers all over the world. This makes it difficult to determine the exact location of income and profits and to collect taxes. One major tax haven for companies is Luxembourg. According to a 2014 report by the International Consortium of Investigative Journalists, ICIJ, some 340 international corporations, including Amazon, McDonald's, and PepsiCo, used tax avoidance tactics in Luxembourg. These companies entered into agreements with Luxembourg tax authorities to minimize their tax bill. If you like this video, we appreciate a thumbs up and you subscribing to our channel. Impact of tax avoidance on society. The lack of tax revenue has concrete consequences, especially in areas such as education, health, and infrastructure. Problematically, the trade in goods is transferred from local stores to the internet to corporations such as Amazon. Therefore, local stores are closing and tax revenue is missing. However, due to the tax avoidance strategies mentioned above, Amazon does not pay these taxes either. Ultimately, the money is missing for the country. The consequences of this tax avoidance are serious. Amazon pays less tax than small businesses, which are often forced to pay their taxes, resulting in a distortion of competition. At the same time, Amazon's failure to pay taxes puts a strain on public coffers and thus harms society as a whole. For example, a lack of funding for schools and universities can lead to lower levels of education, which can hurt a country's competitiveness in the long run. Similarly, in healthcare, a lack of public funding for public facilities can lead to poorer care for the population. Lack of investment in public transportation, roads, or bridges can lead to long-term infrastructure deterioration and restrictions on mobility and supplies for the population. According to a 2019 Oxfam report, Amazon paid only 7.4 million euros in taxes in Europe, even though Amazon had sales of 27.6 billion euros in the region. Measures to prevent tax avoidance by corporations. Given the difficulties in preventing tax avoidance by corporations, governments and international organizations have taken measures to counter these practices. Some of these measures include increased international cooperation. Cooperation between different countries and international organizations such as the OECD and the EU has been strengthened to improve the exchange of information between countries and make cross-border tax avoidance by corporations more difficult. Strengthening tax authorities. Governments have provided their tax authorities with more and more resources and personnel to combat tax avoidance by corporations. Greater monitoring and oversight of corporate tax practices can help ensure that they comply with tax laws. Closing tax loopholes. Some countries have closed specific tax loopholes used by corporations to avoid taxes. One example is the so-called patent box, which allowed companies to tax a portion of their profits from patents at a lower rate. By closing such loopholes, governments can prevent companies from reducing their tax burden. Reducing tax havens. Many countries and international organizations have taken steps to reduce the use of tax havens. For example, the European Union has created a list of countries that are considered tax havens and introduced sanctions against companies that do business with these countries. The Organization for Economic Cooperation and Development, OECD, has also adopted guidelines to combat tax avoidance and the use of tax havens. Introduction of digital taxes. Many countries are currently discussing the introduction of a digital tax, which would target the profits of companies that provide digital services. The reason for this is that many of these companies are based in countries with lower tax rates and generate a large portion of their profits outside the country due to their digital business models. A digital tax could help ensure that companies pay a fairer share of taxes. Solutions for a fairer tax policy. The previous chapters have shown that tax avoidance by large corporations is a serious problem that leads to an unequal distribution of wealth and puts a strain on the public budget. The question arises as to what solutions are available to create a fairer tax policy and combat tax avoidance. One possibility is to conclude international agreements to ensure uniform taxation of corporations. To this end, the Organization for Economic Cooperation and Development, OECD, has launched a project to develop a global solution for the taxation of multinational corporations. This would involve taxing the profits of corporations in every country in which they operate. The implementation of such an agreement would make it more difficult for countries to undercut each other, thus ensuring fair taxation. Another approach is to increase public pressure on companies to voluntarily disclose their tax payments. One example is the Fair Tax Mark campaign, which encourages companies to be transparent about their tax payments and act ethically. Companies that meet the criteria receive a certificate attesting that they are acting ethically. There are also ways to combat tax avoidance at the national level. Some states have already enacted laws that allow targeted taxation of corporations. France, for example, has introduced a Google tax that specifically targets online advertising. The tax is 3% of sales and is designed to ensure that companies that advertise in France also pay taxes in the country. In summary, there are several approaches to creating a fairer tax policy and combating tax avoidance. International agreements, public pressure on companies, and targeted taxation of corporations can help ensure fair taxation. Despite some positive developments, however, much remains to be done to create fairer tax policies and enable a more equitable distribution of wealth. It is clear that effective taxation of corporations is necessary to maintain public services and infrastructure and to ensure a fair distribution of tax burdens. However, there are also arguments that the current tax code is too complicated and opaque, making it easier for companies to exploit loopholes and avoid taxes. To address the problem, fundamental reform of the tax code is needed to ensure that businesses pay their fair share of taxes and that no loopholes remain for tax avoidance or evasion. What can you do to pay as little tax as possible? Generally speaking, you should always file a tax return, because most of the time you pay too much tax during the year, and you can always get some of that extra tax back relatively easily by filing a tax return. Meanwhile, there are many apps or tools that you can use free of charge. A tax advisor is usually only worthwhile if you have a high income. In the US, there are tax advisors who are licensed by the Internal Revenue Service, IRS, and offer professional advice and support in tax matters. However, there are also many independent tax advisors who are not licensed by the IRS, but can still provide qualified advice and assistance in tax matters. Tax laws in the US can be very complex and change often, so consulting with a qualified tax advisor can be crucial to ensuring that you file your taxes correctly and on time and take advantage of all possible tax benefits. Often, however, with a little diligence, a tax return can easily be done yourself. And finally, here are 6 concrete tips for reducing your taxes, using the US as an example. Take advantage of tax-deductible expenses. There are many expenses you can claim on your tax return to reduce your tax burden. You can deduct certain expenses such as medical expenses, charitable donations, education expenses, state taxes, and mortgage interest from your taxes. Investment in a private retirement plan. If you contribute to a private retirement plan, such as a qualified retirement plan like a 401k or a traditional IRA, you can reduce your tax burden because your contributions are deducted pre-tax. That's because your contributions are tax deductible. And when you retire, you'll only have to pay taxes on withdrawals. Invest in a tax-advantaged account. There are several types of accounts that can provide tax-advantaged benefits, such as Roth IRA, Health Savings Account, HSA, and 529 College Savings Plan. Take advantage of tax-advantaged investments. Invest in low-tax investments such as municipal bonds, which are exempt from federal income tax, or long-term capital gains, which are taxed at a lower rate. Start a business. When you start a business, you can deduct various business expenses from your taxes, including office supplies, travel, and entertainment. Take advantage of tax planning opportunities. With certain income and asset levels, you can reduce your tax burden through clever tax planning. Examples include choosing a tax bracket or taking advantage of tax breaks for certain types of income. There are already some positive developments and measures that have been taken to combat corporate tax avoidance, such as the introduction of public tax transparency reports or the enforcement of minimum taxes. Amazon, which is affected by these measures, has made several public commitments in recent years to pay its fair share of taxes, but it remains to be seen whether these promises will be implemented in practice. It is clear that solving the problem of corporate tax avoidance is a long-term and difficult process that requires collaboration between businesses, governments, and society. Ultimately, however, we must remember that corporations are part of society and that they, like every individual, must pay their fair share of taxes in order to build a just and sustainable society. That was today's video about the low taxes paid by some large corporations. Thanks for watching.